Property owners are now getting huge rent increases. Let's take a look at why this is a bigger deal than you ever thought. Hi, I'm Keith Weinhold. This is Get Rich Education. Residential rents are sizzling nationally. For one-bedroom units, they're up 9% annually. For two-bedroom units, they're up 11%. That can work for your tenant as long as their income keeps up proportionally with these rent increases. But let's take a look at what this does for property owners and how it is a boon for them in making you more profitable if you own a rental property. And let's just go ahead and take a look at this sample property. And what we're going to do is we're going to say that rents go up 10%. But first, let's look at what we have at the time. We have, let's just say this is a single family rental home that you have. Rent income is $1,000 minus your mortgage principal and interest. That payment stays fixed for all 30 years. That's $400. And then all of your recurring operating expenses, vacancy, insurance, maintenance, taxes, utilities, and management. VIMTUM, you know, I like easy ways to remember things. That gives you your bottom line cash flow, your passive income of $100 a month. Well, let's take a look at what happens with today's dynamics. We've got operating expenses here. They total $500 currently. Now, if we have 5% inflation, which is about what we have had, well, your operating expenses, this VIMTUM, they are generally indexed to inflation, so that makes this something like $525 now, if they're all indexed to inflation. If you're getting a 10% rent increase, which is about the national average lately, your rent just went from $1,000 to $1,100. So what does that leave you with for cash flow? $1,100 rent minus $400 mortgage. Again, that principal and interest stays fixed, minus your $525 for operating expenses indexed to inflation. That gives you a cash flow of $175. That's the math now. The money that you feel in your pocket every month, therefore, just went up 75%. And maybe you're thinking, oh, that's no big deal. That's just some small property. Well, yeah, extrapolate that effect across your entire portfolio. And this is why it is a boon. This can make the difference between you having enough passive income to leave your job, get financial freedom, quit your day job, and start your daydream, or not. This is potentially that opportunity. So this is happening because, again, your mortgage principal and interest stays fixed. That is a big part of it. Again, you are leveraging the bank's money. Really, this is the third leg of the inflation triple crown that I talk about, called cash flow enhancement. You're winning as a real estate investor with a loan on a cash flowing property when you're leveraged like this with inflation. Hey, go ahead and put a YouTube like on this video if you like that concept that we're talking about here with cash flow enhancement, how inflation makes you wealthier as a property owner. You're probably not putting a like on it if you're a tenant, however. And let's go ahead and take a look at some of these trends and dynamics around just how to create more of this for yourself. Currently, national rent trends, if we look at this chart from Fred, in just the past year, the homeownership rate has dropped from 68% down to 65.5%, just rounding off there. So therefore, if we flip-flop that and take the inverse, renters have gone from a proportion of 32% in the United States to 34.5% over just the last year alone, as we continue to become more of a renter nation, a trend that really ought to continue. And as we continue to look at this chart, what are some reasons that people rent rather than own anyway? A lot of people don't have enough for a down payment, or they have poor credit, or their credit might be good, but they have a lack of an employment history, or someone might have good financial wherewithal, but they want to be a renter because they're new to an area and they want more flexibility in their living arrangements. Some people want to be sure to have more time in their life and they don't want to get caught up doing maintenance or mowing the lawn or going to Home Depot or anything like that. They want time and freedom in their life. They want to rent. Some people would rather rent a place really close to their workplace and have things like a hot tub and a gym that's already taken care of them, rather than making a long commute out to the suburbs and having a big yard and more to take care of. A lot of times it's a lifestyle consideration for people. Another thing is that the health crisis really introduced uncertainty of income for a lot of people. Home prices exploded in the health crisis. They've done even better than Peloton bicycles, and home gym equipment. And now what's happened is rent prices are really running up. So renters thought they'd catch a break from these home price bidding wars and sort of stay out of that fray. But now they're running into rental price bidding wars. There are more renters, more people being put into the renter pool because they cannot afford higher home prices. That keeps them from getting their first home and keeps them as renters. Alas, it was not rent to be for these people. They couldn't get their first home. They can't form that down payment. Lower interest rates don't help you if you can't form that down payment in the first place. It's going to keep you as a renter. So rents really are surging for a lot of reasons. Last year, with a lot of people losing their service worker jobs, many went to live with their parents. That actually reduced the number of U.S. households last year. That's now back on the increase this year. Millennials are another reason. Millennials are the biggest generation in United States history, and there was a lot of pent-up demand as those millennials couldn't get their own place last year. Now they're coming out and they need some place to live, whether they own or rent. We've got low supply overall, we've got monetary inflation, and we have the increased utility value of a home. People really want to get their home right because they're working from home now when they weren't doing that so much in 2019. They also might be working out from home or caring for children from home. So they really need to get their home right. This is the demand for property. This is the new space race. There's simply not enough housing, not enough units to either rent or own. The home price surge, which started last year, that tamps down on rent to price ratios for investors. So when an investor goes and buys a property, if they get the same rent amount for that property, but now the property value is greater, well, that's less profitable. That is beginning to turn around now as rents are surging. This helps rent incomes as far as the perspective of the ratio of rent income to purchase price, which is a key formula for real estate investors' profitability. So of course, this year, it's really tilting more toward a real estate investor's favor. Now, in normal rent pricing conditions over time, where we might get something like a 4 to 5% rent increase, if you serve your tenant with a notice of a 4 to 5% rent increase, well, a lot of times that's really not that much different than inflation. Their wages might have kept up with that, and a lot of times they're not going to move. But the problem is if you serve your tenant with a notice and let them know, here's a 10% rent increase, they're really not going to like that. They might have difficulty doing that. Tenants don't know about national trends or inflation. And God forbid, don't even try to explain to your tenant that, come on, don't you know there's inflation and the Fed is basically printing $120 billion a year by buying treasuries and mortgage-backed securities? They don't want to hear that. They don't understand that. Their head will spin. So really, it is easier for you to get a tenant rent increase between tenancies, because if you try to raise the rent 10% or more on that existing tenant, on that incumbent tenant, they're kind of psychologically anchored to the recency bias. They know they're just renting the same place from you that they paid less for 1 year ago, 10% less, so it's really difficult for them to wrap their mind around that. I did shoot a video about how to get rent raises, what to say and what not to say to your tenant to increase the chances of getting a rent increase. So it's between tenancies where it's easier to get that 10%, 15%, maybe just maybe a 20% rent increase between tenancies when you have a new tenant that comes in. They don't know what the old tenant was paying and they don't care. I've never gotten a 20% rent increase. Let me know in the comments down below if you do or what the highest rent increase that you've received lately has. I would be very interested to know that. The expiration of those annoying eviction moratoriums, that does mean that a few more units are open for new tenancies. That also might open up a little bit more supply in the market. Rent increases have been happening all over the place. The nation's capital has more than just capital appreciation lately. Yes, rents are up 11% in DC, not year over year, but just from the beginning of this year, just from January until now. The devil rent down to Georgia, I guess. Metro Atlanta rents are up 17% year over year. Gosh, I'm really getting corny with these puns today. Even demand for New York City parking spaces is soaring. We're in an underbuilt condition. We have these millennials that now want to have their own place, and we had pent-up demand for that. This is why I call it real estate's new space race. As we just scrolled the latest Zumper rent report here, some of the highlights are we have annual growth in Phoenix. This is not appreciation, this is rent growth of 21% there in Phoenix, 16% in Cleveland, 12% in Jacksonville, 11% in Des Moines, and nearly everywhere else. Hey, go ahead and put a like on this if you haven't put a like on it already. It's certainly something that property owners like quite a bit more than tenants these days. But you as a property owner, you had to weather eviction moratoria and a lot of other uncertainty over the past year and a half or so. These really are the trends. Rents are increasing probably even greater than the rate of inflation, even though the rate of inflation is stepped up. This is where the trends are. If you think it makes sense for you to take a look at some investment property, you can buy where I do my own buying at GREturnkey.com. A turnkey property is a property that's already been renovated, or it's even new construction. It's already tenanted, and it's even held under management, typically by that same company that performed the renovation. A professional company does these fix and flips at scale in an investor advantage market. That's what turnkey real estate investing is, where you own title to the property yourself and you get rent checks yourself. Now, in a phase like this, I know what you might be thinking. Maybe you're thinking you could buy for negative cash flow. Like with that example I gave earlier, say that rents are $1,000 and your expenses are $1,200 with the mortgage and all those operating expenses. That would be a negative $200 a month cash flow condition. And I know what you might be telling yourself, hey, with rents on the increase like this, it's okay. Maybe I'll suffer some negative cash flow for a few months or a year, but rents are stepping up, so it'll be okay. I don't buy that way. That really tilts into speculation. You can do what you will. You know what your personal cash flows are. You know what is risky and what isn't, but that really tilts more towards speculation rather than investing to me. I know it's tempting, so I really recommend buying for cash flow. I've been a direct real estate investor for 19 years. In the case of a market downturn, as unlikely as it seems, with supply being as low as it is, cash flow is what keeps you afloat, and rents often don't go down much, even in a recession. It also might be tempting for you to do no good, and if the faucet is leaking or if part of the roof needs to be replaced, for you to neglect repairs because you're thinking there's such a space race that, hey, it's okay, my tenant won't move out. No, I don't want you to do that either. I want you to do good in the world here. Never get called a slumlord. You're going to want to feel good about what you're doing and not take advantage of people. You can buy from the same place I buy at GREturnkey.com. So these are some of the reasons that rents are increasing. These are why even relatively modest rent increases can have a substantial impact on the cash flow that you feel in your pocket every month. Here with this example of where a 10% rent increase increased the cash flow you feel in your pocket 75%. This is real estate's new space race. I'm Keith Weinhold. Thanks so much for stopping by. I'll see you in the next video.